Welcome, my dear subscribers, my viewers. This is my fourth episode on practical problems on profit and loss of preparation account. I have already prepared three important episodes relating to preparation of profit and loss of preparation account. So I request you to go through episode 1, 2, and 3. I'm proceeding stepwise. So today the question is X, Y, and Z are partners. Their capital balances as on 1st January 23 were 60,000, 40,000, and 20,000 respectively. Prepare profit and loss of preparation account for the year ended 31st December 2024 after considering the following information. Interest on capital at the rate of 5% per annum. It is quite easy. It was given in every questions. X is entitled to salary of rupees 400 per quarter. Salary is 400 per quarter. Okay. If it is 400 per quarter, then if you multiply by 4, you will get the annual salary. So it will be 1600. Okay. Y is entitled to commission of 10% of net profit before charging such commission. Drawing X 4000, but date is given 1/4/23. Here the date of drawing is given. The X has withdrawn 4000 on 1st April 23. So if you count from 1st April to 31st December, you'll get 9 months. So here the date of drawings is given. So we have to count it, the number of months, in order to calculate the interest on drawings. So you have to calculate interest on X drawings for 9 months. Then okay, and Y rupees 4000. See, X is also 4000, but the date of drawings of X is given, so we have to calculate interest on an average for 9 months. For 9 months, that is exact date of drawings. But Y is also withdrawing 4000, but the difference between X and Y's drawing is that in X case the date of drawings is given, so we count it from the date of drawing till the end of the financial year, that is 9 months. But in a case of Y's drawing, lump sum amount is given 4000, but the date of drawings is not given. If lump sum amount is given and the date of drawings is not given, then interest on drawings should be calculated on an average of 6 months. Okay, we have to calculate interest on drawings on an average of 6 months. Transfer 10% of net profit to general reserve. Net profit before charging the above, but after X salary amounted to 40,000. This is very important. See, partner salary is an appropriation of profit, whereas employee salaries is a charge against profit. If it is manager's salary, then it could be deducted from profit and loss account. But partner's salary should be shown in profit and loss appropriation account. But the net profit has already deducted the partner's salary of, that is 4000 into 400 into 4, that is 6, and is absolutely incorrect. So the net profit that is given 40,000 should be before partner's salary, but it is after salary. So we have to add back salary in order to get the correct net profit. So we need to show partner's salary on the debit side of profit and loss account, but from net profit the salary has already been deducted, so we have to add back and we have to write partner's salary on the debit side of profit and loss appropriation account, right? And the interest on drawings is 3% per annum. Prepare profit and loss appropriation account for the year ended 31st March 2000. So it should not be 31st March. I am really sorry. It should be 31st December. As I am using the same question for my convenience, I am making mistake. So it should be as the capital balance is given on 1st January 2023. Definitely the accounting year will end on 31st December 24. It's the 31st December 23. I'm really sorry for this. As I'm using the same question, I'm just changing certain items while preparing episode 1, 2, and 3. Because of that, I'm committing some mistake, but I have rectified. Nothing to worry at all. Now let's go for the main thing. Now let's prepare profit and loss of preparation account. See, on the debit side of profit and loss of preparation account, what you have to do first, you have to write net profit. Then, on the credit side of profit and loss of preparation, you have to write net profit. Then interest on drawings. All other items will appear on the debit side, like interest on capital, partner's salary, partner's commission, transfer to reserve, divisible profit. Everything will appear on the debit side. So your net profit after salary is 40,000. So I'm writing net profit on the credit side 40,000. But we have to write partner's salary here on the debit side. But this 1600 has already been deducted from this net profit. So from net profit, this is after salary. I need before salary, so I'm adding salary. 400 per quarter into 4, 4 4 just 16, so it is 1600. So exact net profit should be 41,600. So 41,600 is our adjusted net profit. You cannot take 40,000, right? If you take 40,000, that we should not show partner's salary on the debit side. So it's better if you add partner's salary with net profit, it will be convenient to show partner's salary on the debit side. So our net profit is 41,600. The next item given in the question, if you see the question, definitely it should be interest on capital at the rate of 5% per annum, and partner's capital as given 60,000, 40,000 and 20,000. See, partner's capital, X capital 60,000, Y's capital 40,000 and Z's capital 20,000. So rate of interest is 5%, 5%, 5%. So 6,000, 5%. So it is 3,000. So 5% of 6,000, 60,000 is 3,000. 5% of 40,000 is 2,000. And 5% of 20,000 is 1,000. So altogether you will get 6,000. Okay. Then the second item is X is entered salary of 400 per quarter. Then we have to write two partners' salary. That is X 400 into 4. That is 1600. Okay. So it is 1600. Then it is done. Then X is and Y is entitled salary of 10% of net profit before charging such commission. So Y's commission is on net profit, and net profit, you know, it is after adjustment. Net profit is 41,600, and net profit after commission, how do you calculate? Net profit into rate divided by 100 if it is before charging such commission, and if it is after charging such commission, then net profit into rate divided by rate plus 100. So 41,600 into 10 by 100 gives you 4160. So we have already practiced these things. Then we have drawings. X 4,000, 1 for 23, and Y also 4,000. See, let's have a look on interest on drawing. So if you calculate interest on drawing, see, 4,000 lump sum amount is given. If lump sum amount is given, then date of drawings is also given. Then you have to calculate interest for the actual period of use. 4,000 is the amount of drawings. The rate is 3 by 100. But we have to count from 1st April 23 to 31st December 23. So it will amount to 9 months. So 9 months means 9 by 12. So 4,000 into 3 by 100 into 9 by 12 give you rupees 90. And Y's drawing is also 4,000, but the thing is different. Here date of drawings is not given, so 4,000 into 3 by 100 into, if date of drawings is not given but per annum is given, we have to calculate interest on an average for 6 months. 6 by 12, that gives you 60. So if you add these, you will get 150. So I have given as a notes, if date of drawing is not given, interest should be charged for an average period of 6 months. Okay, then we'll move forward. Transfer 10% of net profit to general reserve. So we are transferring a certain amount of net profit to general reserve. It will again appear on the debit side. So we have to write to transfer to reserve, but it will not be transferred to any person name. You just have to write to transfer to reserve, as it is on 10% of net profit. So net profit into rate by 100. So net profit is 41,600 into 10 by 100, it gives you 4160. So commission is also 4160 and transfer to reserve is also 4160. So we are almost done. Now we have to calculate divisible profit. For this we have to add credit side If you add 41,600 plus 150, you will get 41,750. Okay, from 41,750, if you deduct 6,000, 1,600, 4160, then definitely you will get divisible profit of 23,830. Okay, the divisible profit will be 21,830. It will transfer to either partner's capital account or partner's current account. Okay, so here in the question, nothing has been said regarding profit sharing ratio. Nowhere has been mentioned regarding profit sharing ratio. If no information is given regarding sharing of profit and ratio, then you have to follow provisions of the Partners Act 1932 and you have to distribute profit equally. As there are three partners, the divisible profit will be 1:1:1. So X profit will be 25,830 into 1 by 3, that is 8610. Again 23,830 is share also will be 8160. Z also 23,830. You will also get 8610. So if you add all this total, you will get 25,830. Okay, so this is how we calculate profit and loss appropriation account. The only difficulties in this question was the net profit was before salary, after salary, but it should be before salary. So we added net profit, added salary with net profit. So the amount of salary would be 400 per quarter. So 400 into 4, that is 1600. So we added first 1600, then it became 41,600. After that, we could easily show to partner salary on the debit side. So I hope you have understood. Okay, I've mentioned everything in detail. Episode 1, 2, 3, I'm trying to cover everything in details. Only thing which has not been taught, which I will be teaching you in episode 5, is how to deal with interest on partner's loan. Okay, in my next episode, that is on Friday, tomorrow, it is because 15th August 2024, it is our Independence Day. So I am not going to upload any videos on 15th August. So I will also be quite busy tomorrow. But day after tomorrow, that is that is Friday, as I've already mentioned you, I will be uploading videos on economics. So I will be uploading again video on profit and loss appropriation account only on Monday. But don't forget to subscribe my channel. Get ready for my economics video on Friday and Saturday. Till then, goodbye.